Good afternoon, welcome to GrainTV. My name's Cody Bills. Today is the 9th. It's a Thursday. We had export sales out this morning, and then mid-morning we had the USDA supply and demand report released. But before we get into both of those reports, let's take a look at the trading platform over here and see where we closed off the day. Corn trading down 1 1/4 cents. Soybeans down 18 cents here on the day, and wheat in Chicago trading down 7.5 cents. Let's take a look at the export sales that came out early this morning. You'll notice soybeans in particular, big disappointment there with cancellations of 176,000 metric tons. Analysts were expecting anywhere between cancellations of 50,000 metric tons and actual sales of 150,000 metric tons. So the bottom line here is we went a little bit backwards in our cumulative export sales here for soybeans, and that was a bit bearish. What we saw, a major reason why we saw these cancellations is China moved about 300,000 metric tons of sales from old crop. They switched it over to new crop, and that's one of the reasons we saw this cancellation. So this was not very positive. Early on, we saw soybeans trading lower here, especially going into the WASDE report. Take a look at corn and wheat, both beating analyst expectations here this week. Corn booking 639,000 metric tons compared to expectations of between 350 and 450,000 metric tons. We did see this an improvement of 57% week over week compared to last week's export sales. So it was good to see here for corn, and I think that's one of the reasons why we saw corn, the relative strength here in the grains, despite the fact that it also closed in the negative on the day. We saw wheat come in here booking 319,000 metric tons. This is positive to see. 97% increase week over week in sales, beating analyst expectations, which range between 50 to 150,000 metric tons. Let's take a look here at the overall cumulative sales here. You'll notice this is corn. You can see we moved ahead here, 38 million metric tons here booked, versus this time last year when we had 41.9. So we are behind last year's pace, but we're ahead of what's needed to meet the USDA expectations, taking into account seasonality here. What we typically need right now is around 36.3 million metric tons. We have 38 million metric tons booked, so that's very positive to see. When you look at soybeans, you'll notice each one of these red lines represents the cumulative sales, and you'll see that this week the bar furthest to the right, actually declined a bit, and so that's something that, of course, is not positive for prices. It was something we were expecting to see. We were expecting to see sales to really flatline from this point going forward, and possibly even see some cancellations, especially with a pickup in export sales out of Brazil during April. You'll see we've booked 48.3 million metric tons compared to this time last year when we were around 44.6. And of course, the pace needed to meet USDA expectations of 44.7 million metric tons. Let's talk a little bit about the WASDE report. This WASDE report came out here. We did see some volatility following the WASDE report. You'll notice this is the ending stocks. What we saw here is an ending stocks change. We saw corn come in, increasing ending stocks up to 1.827 billion bushels here. That's about 27 million bushels lower than expectations here. So that was a little bit positive. One of the reasons why we saw relative strength out of corn as well. You see soybeans here meeting analyst expectations. We saw a slash in overall ending stocks from the March report. Reason behind this, of course, is the March 31st quarterly grain stocks report showing less soybeans there than expected. What we saw here is 370 million bushels here expected to be ending stocks at the end of this marketing year. And wheat came in. This was actually below what analysts were expecting, 684 million bushel carry out here, down 7 million bushels from what analysts were expecting. When you look at the overall global ending stocks, one thing you'll notice here is that corn did increase, so that was a little bit bearish here overall. Take a look at the daily corn chart here. We'll go through these charts real quick. Each one of these charts is a daily chart, each bar representing 1 day worth of price activity. You're going to notice here that corn, we saw a decline in price earlier on in the day, but we ended up closing near the higher side of the range. So that is positive to see. There is some support down around the lows of the day. I wouldn't be surprised if we get a little bit of a turnaround here in the days to come following this report. Wheat was able to kind of hang in there. No major decline, down around 7 cents on the day. You can see there is some support down there with the 20 and 50-day moving averages. It's going to be interesting to see if maybe corn, maybe wheat provide a little bit of support here in the following days. You look at these two charts, and wheat in particular, it almost has the appearance here that we're kind of hammering out a bottom. It doesn't feel like we're cupping over on lows. It more has that feeling of just providing this big long base here, and it's going to be interesting to see if weather provides that catalyst here to break higher out of it. Of course, we've had very, very dry weather throughout the plains. That's impacted winter wheat in the panhandle of Texas as well as Oklahoma, and that's something that we're going to be paying close attention to here in the weeks to come. You guys, thanks a lot for tuning in. If you have any questions about what we talked about today, give us a call. The number is 877-472-4607.